Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this December 15th, 2025. We've got a packed day with some mixed signals across the board, a tech sector under pressure, and exciting developments on the horizon for 2026. Whether you're in it for the long haul or keeping an eye on short-term moves, let's dive in to what's shaping the landscape for us retail investors. Starting with the big picture, the major indexes showed a bit of a stumble today. The S&P 500 slipped slightly, down a modest 0.16%, while the Nasdaq took a harder hit, dropping 0.59% as tech stocks faced some selling pressure. The Dow Jones wasn't spared either, easing down 0.9%, and the Russell 2000, representing small caps, fell 0.81%. It's a bit of a cautious vibe out there, folks, with volatility ticking up as the VIX jumped nearly 5%. For long-term investors, this kind of pullback isn't a red flag yet, but it's a reminder to stay vigilant, especially as we head into the final full trading week of the year. Now let's spotlight some winners. Among the large caps, Tesla led the charge with a solid gain of over 3%, hitting an all-time high on news of advancing robotaxi testing. That's a nod to their innovation pipeline, which could be a long-term growth driver. Eli Lilly also impressed, up more than 3%, continuing its strong run this year with over 36% gains. Other standouts include Toyota and Philip Morris, both climbing around 3%, showing strength in consumer and defensive spaces. For us long-term folks, these names highlight the value of diversified exposure across sectors. On the flip side, we've got some notable decliners dragging down the mood. Broadcom took a significant hit, down over 5%, reflecting broader concerns in the semiconductor space after some disappointing guidance from peers. ServiceNow saw a steep drop of nearly 12%, sparked by reports of a potential $7 billion acquisition that's got investors jittery about overpaying for growth. Uber and Alibaba also slipped around 3 to 4%, adding to the tech and consumer discretionary weakness. Short-term, these dips might offer entry points, but for long-term strategy, it's about assessing whether these are temporary blips or deeper issues. Looking at the market movers, Nvidia remains a focal point with high trading volume, inching up slightly by less than 1%, though it's still a heavyweight in the AI narrative. Tesla, as mentioned, was active and up over 3%, while Apple and Amazon both saw declines of around 1.5%, reflecting some profit-taking in mega-cap tech. Broadcom's heavy loss also kept it in the spotlight for the wrong reasons. These movers show how concentrated the market's attention is on tech and innovation-driven names, something us long-term investors need to balance with broader portfolio stability. Diving into the most active stocks by volume, Nvidia and Tesla again dominate the conversation, showing just how much investor interest is locked into these names. American Airlines also saw heavy trading, up over 2%, possibly on travel demand optimism. Smaller names like Plug Power and BigBear.ai were active but under pressure, down 4 to 6%, hinting at speculative trading in riskier corners of the market. For us, it's a reminder that volume doesn't always equal value. Stick to your research over the noise. Shifting gears to broader market narratives, there's a lot of buzz around AI and tech, but not all of it is positive. Reports suggest we might be in the advanced stages of an AI bubble, with heavy spending by big tech raising eyebrows. Bridgewater even called it dangerous reliance on external capital. Meanwhile, Oracle's stock continues to slide on concerns over massive capex and cash flow strain, despite its AI-driven backlog. For long-term investors, this is a critical pivot point. AI is a secular trend, but overvaluation risks mean we need to pick our spots carefully. Peering into the S&P 500 outlook for 2026, analysts are throwing around some bold targets, with some projecting the index could hit 8,000, fueled by AI enthusiasm and expected rate cuts. However, there's caution too. The average stock underperformed in 2025, and risks are building beneath the surface. As long-term players, this dual narrative means staying invested in core assets while being ready to pivot if momentum shifts. Over on the Nasdaq, the story is similar, but with a sharper tech focus. After a 1.6% weekly drop, partly due to AI earnings scares, there's chatter about whether the narrative driving gains over the past few years is cracking. Disappointing results from key players have spooked investors, but for us it's about looking past the noise. Tech's long-term growth story isn't dead, just recalibrating. Let's talk earnings, as we've got a busy week ahead. Big names like Costco, Adobe, and Oracle are set to report, and the market's watching closely for clues on consumer spending and tech investment trends. Oracle's already under pressure, so their numbers could sway sentiment further. AutoZone and Ferguson are also on deck, offering insights into retail and industrial health. For long-term investors, these reports are less about day-to-day moves and more about confirming the durability of growth trends into 2026.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Checking the top performers over the past week among large caps, EchoStar surged an incredible 43%, while Rocket Lab jumped over 25%, hinting at space tech gaining traction. Warner Bros. Discovery and Carvana also posted double-digit gains, showing strength in media and consumer cyclical spaces. These weekly movers can signal emerging trends worth watching for long-term portfolio adjustments. On the downside, Credo Technology dropped over 22% in a week, with Marvel Technology and Alnylam Pharmaceuticals also seeing steep declines of 15% or more. Oracle's 13% slide over the week adds to its woes. These losses, especially in tech, underscore short-term volatility, but for us, they're a chance to reassess fundamentals over panic selling. Sector-wise, consumer defensive and real estate held up best over the past week, with minimal losses or slight gains, showing resilience amid the broader pullback. Basic materials also saw a decent weekly uptick of nearly 2%, possibly on commodity strength. These sectors offer some stability for long-term portfolios looking to weather market choppiness. Meanwhile, technology was the worst performer, down over 2% for the week, with energy not far behind, shedding nearly 2%, as oversupply concerns weigh on oil. Industrials and utilities also lagged, reflecting broader economic uncertainty. For us, this rotation away from tech and energy might signal opportunities to buy low if fundamentals hold.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.